Welcome to Bears in Exile. Today is November 14th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, today was a not exciting day. Matter of fact, it was pretty disappointing, actually. Um, we have several things to look at tonight. First being, we didn't end up with a straight hammer or a spinning top or anything like that. We got this hybrid, just not very detailed candle. And we have said in the past how when you have a big candlestick, full candlestick, the middle of it is support or resistance depending on which direction you're coming from. And that's exactly what happened today. We got right to the halfway point of the real body of the previous candle and backed away from it. Beyond that, we are still above the 200-day moving average. We have the short-term moving averages all pointing up. We have the middle Bollinger Band right in the middle. So for the bearish perspective, that is not good. Yes, we still have this minor high just above us, and we have the previous peak just above that, and we have the upper price consensus level right smack dab in the middle of that. And so there is some resistance. There is. If those are broken, those three levels are broken, the bears are in big trouble. There's just no getting around that. We have a bullish bar forming. It'd be nice if we came back for a retest of that in the very near future, but that may not happen. It'd be even better if we had a retest of the major price consensus level. And I think that it is entirely possible. But we need to see some action on the side of the bears. Indicators very interesting today. Side tick on CCI. Side tick to slight uptick on the 14-day RSI moving average. Now, we said that it takes a lot of power to move that. And, if we blow this way up, we can see that it has an ever so slight uptick. So not glossing over any of the warts, but yeah, side tick to slight uptick on the 14-day RSI moving average. That is very surprising. And that run the last two candles prior to today is what accomplished that. Fast stochastic pointing up, slow stochastic still pointing down, RSI pointing up. Still have the bearish cross on the MACD, but it is leveled out, and essentially a side tick on the MACD histogram. Not a good sign for the bears, and we're going to see more here in just a moment. SPX. Yep, we're still below the 200-day moving average. Yeah, we backed out from it a little bit. We did get slightly below the middle of the candlestick today from yesterday. Notice that the tail actually pierced through the middle portion, and it closed right at the middle mark. So that's not that great either. We still have the middle Bollinger Band above the short-term moving averages. They are not exactly pointing up. They are mixed from side to down to up. So this does look much better than the Dow in that case. We are trying to form a bullish bar. It is still in the early stages. And down tick on the CCI, side tick on the 14-day RSI moving average, not with any kind of up question mark. Uptick on the fast stochastics, downtick on the slow stochastic, uptick on the RSI, very slight. Downtick on the histogram, not a side tick, and a downtick on the MACD histogram. So this does look much better for the bears than the Dow does. SPX. Another not so pretty. We have a gravestone doji. Yeah, we have a nice gap up. Yes, we are above the important $30 mark. Yes, we have the middle Bollinger Band below the short-term moving averages, but we did not close inside of the long-term moving averages. We did close below the major price consensus level. CCI ticking up, slow stochastic pointing up, fast stochastic pointing down, 14-day RSI moving average still ticking up, down tick on the RSI, slight uptick on the MACD histogram, and a side tick on the MACD. Yeah, it's not overly encouraging. We should have had a better move today than we did. Maybe it'll happen tomorrow, but the candle is not encouraging. Um, and the indicators are mixed. So we have to see the VIX pop up and overcome 36, just above 36, and get above this candle. Then we're in business. But very weak showing today. Very weak. TNA still doing the little sidestep that we've been having all this time, hanging out in the long-term moving averages, continuing to flatten the bearish bar. Middle Bollinger Band still above the short-term moving averages, which are pointing down. Downtick on the CCI, downtick on the slow stochastic, uptick on the fast stochastic, side tick on the 14-day RSI moving average, uptick on the RSI, downtick on the MACD, downtick on the histogram. So nothing's really showing the strength that the Dow is. And boy, we need that Dow to break either to the up or to the down. It's not going to matter either way, but we need a directional move to set the tone. Moving right along to UUP. You can see we also have a, not quite a gravestone doji. This could be maybe a shooting star. It is fairly small, actually very small. Short-term moving averages are still pointing up, bouncing away from the bar, which is a great sign. Middle Bollinger Band below the short-term moving averages, still above the 200-day moving average, uptick on the CCI, uptick on the slow stochastic, downtick on the fast stochastic, uptick on the 14-day RSI moving average, uptick on the RSI, uptick on the histogram, and slight uptick on the MACD. At least that is encouraging. This is actually probably the best chart for making a bearish case at the moment, being bullish on the dollar. But still, that is not the candlestick that we want to see. Everything else is looking pretty good, with the exception of the fast stochastic, but not the candle we want to see. And FXE, perhaps the most important of all the charts at the moment. We had the euro fall all the way down to 1.36, an attempt couple of times, even tonight after hours, to bust back into the 1.35s. At one point today it did get to 1.359. It was only there for a moment and flew away from it. That is not encouraging. We ended today almost with a hammer. It did not test the lower price consensus level. We do have the short-term moving averages all pointing down. We do have the bearish bar starting to reform and get strength. We do have the middle Bollinger Band above the short-term moving averages. That's a good sign. Downtick on the CCI, downtick on the 14-day RSI moving average, downtick on the slow stochastic, uptick on the fast stochastic, downtick on the RSI, downtick on the histogram, downtick on the MACD. So that's good. I mean, this is also giving us reason to believe that there is a bearish case, although this is not the candle that we want right now. Is that going to matter tomorrow? We're going to have to wait and see. If we do have more negative NDEs or uncertainty out of Euroland, I do expect the lower price consensus level to fail, maybe even the previous month's lower price consensus level to fail. And that will begin a correction in the market. Hopefully that will happen soon. GLD, our second VIX. Okay, well, still have the short-term moving averages pointing up. We did end up with a little miniaturized, almost a hammer today. Not a great candle. It is a inside day completely. Bullish bar is still forming, and we still have these levels that we need to bust through and challenge at least the the major price consensus level for the previous month, etc. Downtick on the CCI, downtick on the slow stochastic, uptick on the fast stochastic, uptick on the 14-day RSI moving average, downtick on the RSI, downtick on the histogram, side tick on the MACD. Not exactly pretty in the indicator arena. And last but not least, SLV. Still hanging out in the long-term moving averages. The bearish bar is taking damage, but it's still intact. We are getting the middle Bollinger Band above the short-term moving averages. We're still above the upper price consensus level. Downtick on the CCI, uptick on the 14-day RSI moving average, uptick on the fast stochastic, downtick on the slow stochastic, downtick on the RSI, downtick on the histogram, and side tick on the MACD. Also a mixed bag. We're still of the opinion that we want it to break out and get into this level and then hold when the daily needs to reset. I don't know if that's going to happen. It's sure taking its time, and with the cross of the middle Bollinger Band, that is bringing some doubt. So, like I said, a disappointing day. We didn't have much development whatsoever anywhere, and it's all going to come down to UUP and FXE. Hopefully they will do what they're supposed to do, and that will cause the market to do the rest. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.